venture is a very transparently competitive sport.
Ophelia, I am so excited for this. Thank you so much for joining me today.
Thank you so much. I'm thrilled to be here.
No, I mean, honestly, the patience that you'll have for putting up with this schedule, I'm very grateful. But I want to start with you. So I always start with the wonderful world of venture in the entrance. But how did you make your way into venture and come to found Blossom in, short 3 to 4 minutes?
I always hear that Blossom is long in the making and short in the making. Long in the making in that I think I always knew that I wanted to have my own company or build my own thing. My parents kind of taught me in the early days of like paying your own way. And I started with a side hustle trying to wash car windows near our house before my mum put a stop to that. And then the big idea when I was a teenager was that I wanted to be a restaurant owning DJ. Again, my parents put a stop to that. Went off to university. And when I started my MBA, I went off to INSEAD. I thought that was finally my journey into being an entrepreneur. And then I realized I had this pattern of bad ideas. And the latest one that I was working on was a peer-to-peer car sharing startup, like Zipcar without the assets. And I was beaten to market. And I thought, okay, we've got to kind of stop this.
That was the only reason you failed. Just beaten to market.
Yeah, that was... So, and I started thinking about venture, thinking, okay, if I'm going to build something, I may as well learn the investment side and hopefully come up with a much better idea next time. And I was very fortunate to get a job at Index in their London office. And I just fell in love with the investing side. Like, I just loved enabling entrepreneurs, working with them. And I realized I was much better suited to that than building a company. But the passion to start something never really left. And that's why I say Blossom was short in the making, in that I kind of returned to being an entrepreneur and decided to raise my own funds.
You said there about enabling entrepreneurs. Totally agree. I would say like where you're world class is bluntly winning. Like, no, really, you are unbelievable in terms of winning the most competitive deals. And so I'd love to understand, just like when you think about your own hustle in terms of what it takes to win, why do you think you win such competitive deals, and what do you do to do that?
When I want something to happen, I just focus on something, making that thing happening. When it comes to working with an entrepreneur or wanting to support them or partnering with them, it's just relentless focus on achieving that. And I think I bring a lot of passion and just making things possible. Bluntly, I don't think I hear the word no. So, and I think probably the passion and the commitment and the dedication, I mean, it comes across. I think it's real, it's genuine. I'm not just doing it for the sake of doing it.
Can I ask one weird one? How quickly do you know when someone's special? Because often I worry that I'm taken in by the salesperson. How quickly do you actually get excited and lean in versus it takes a bit of time to see how special someone is?
I think about this a lot. And I think during a meeting, if there was like a radar of like, I'm in, I'm out, I'm in, I'm out. I'm constantly trying to test myself. Like, okay, I've fallen in love within the first 5 minutes, but is this love like real? Are they just too much of a salesperson? Am I caught up in the pitch? Or like, should I be more cynical here? And the constant questions are kind of going through my mind. And I think I hate pitches, right? Whenever I meet with a founder, I'm always like, tell me your journey and I want to understand why you're doing this and what your ambition is and what your drive is. I think I come with a lot of questions because I'm just trying to understand. I would say within the first meeting, for sure, I come out with a decision of go, no go.
How fast do you move post that? Because I think this is another thing where our industry is quite lethargic. And I say to Kira, my partner, it's like, if it can be done today, it's done today. Like a reference call tonight, let's do it tonight. Like, how do you think about the cadence post that?
I think it's a balancing act, actually. I don't love moving super fast. Like, I think that actually becomes a perpetuating myth in the marketplace. Like, Blossom signed a term sheet within 48 hours. But actually, like, from first meeting to 48 hours, that's not a reality. So I did the analysis. Now we're a few years in. I think we normally know founders for 6 to 8 months pre-investment, sometimes a bit longer, because I love to get to know them, like how they work, how they execute, how they hire. Like the investment thesis and decision whether or not to invest is actually made pretty early.
Yeah.
And then there's a period of time. So
can I ask a hard question? Let's stop asking, can I ask? Just ask them anyway.
Just ask the question,
Harry. All right. A lot of founders I'm heads down, especially the ones who've got like great seed investors or like are hot. They're like, I'm heads down and I'm not meeting investors. What do you do then when you want to build the relationship, but they're heads down?
I get it from a founder's point of view. Like, I've got better things to focus on. But I mean, you and I know this from fundraising ourselves. There is so much to be said for the relationship that you build. I don't know how people would decide on a VC that they want to work with within 48 hours or a week. Like, you want to know how that person's going to be able to support you, how they're going to work with you, challenge you, open doors. And so I try and explain that to a founder who's heads down. It's like, okay, I would like 30 minutes of your time. I'm not going to come with the bog standard questions. I'm actually going to use this to show how Blossom can bring value or how we can help and kind of earn my seat at the table for the next 4, 6, 8 months.
Sure.
And most of the time that works. There is also a flip side, I think, which I think has become more prevalent in the market recently, where founders have raised a lot of capital very early on and actually realize that they do need to build some product and execute for a bit before they have more investor conversations. So it's also understanding where they are on that journey, whether you are 6, 8 months off a fundraise or whether you're 18 months off a fundraise, and what the right time to engage is.
Fundraising actually can be fun if you're good at selling, because people just tell you you're great. And I think founders see this and it's like, it's enjoyable, but actually like cap it. So I always say like have 5 names of partners in firms and actually meet them once a quarter for a year. And then you'll have a lot more data points where you can make a decision.
Yeah. And I think the different thing about Blossom as well is, when we're reaching out to speak or spend time with founders, we're partners only at the firm. So it's not like you're wasting your time with us. Like, we try and give as much to the meeting as we can get from it.
No, I totally get you. We mentioned kind of the joys of fundraising there. I obviously love it because I'm insecure and egotistical.
You're very good at it as well.
Thank you. But honestly, a lot of it is like, it's a desire to be liked, and they like me. But my point with that is, like, what are you running from? I think it's such a powerful question. It reveals a lot.
We're going deep.
Yeah.
Okay.
I did the softly deal dynamics. Now
we're
it's
asking the hard questions. Now we're going to the deeply philosophical ones. So I actually did study a lot of philosophy when I was at university. It was part of my undergraduate degree. And I say that because it teaches you enough to know that what you're running from or everything about your life is basically trying to escape from the very reality of mortality. That life is finite. So that's why we busy ourselves. That's why we seek enjoyment in things, is because if you were kind of paralyzed with nothing to do, you would inevitably end up worrying about that.
Wow, we went deep. I was not expecting that. I went to mortality.
But it's more about an enjoyment of life. I'm trying to take every minute that I can and make the most of it.
I love that. I totally agree. There's a brilliant quote from About Time, which is about kind of making every day like truly wonderful, which I love. But that's like Harry's soppy movie choice. I'm losing all streaks right now.
There's truth to it.
There is truth to it. And Mickey Malka, because I spoke to him before, and he's obviously a mutual friend of ours, and he said that you got some advice when starting Blossom. And he asked me to ask, what was this advice and how did it impact your thinking?
I love Mickey. Mickey's one of the people that I respect the most in venture. And certainly someone I went to very early on because he had started his own fund and I think has done tremendously well. There was a lot of advice that Mickey gave me, and some you can only follow if you're Mickey, and then some you can follow if you're a mere mortal.
I got that too, and I was like, maybe not for me.
I mean, the one thing that really resonated or I took away from was that, he told you have to really follow your own judgment and believe in you and do things your way. And I think that serves a lot. Like in the beginning, when you're starting something, you're so unsure of what's right, what's wrong, or whether you do it one way or whether you build for one LP, etc. But he was very fixed on you just do it like that. And my big thing was whether I started as a single GP, and obviously Mickey is a single GP. His piece of advice that I couldn't quite follow, which hats off to anyone in venture if they achieve this, is do one and done close as a first time fund.
I love that, and I think that's so true on the GP side. I think it's kind of like knowing your strengths. I do want to dive on kind of Blossom itself, because speaking of knowing your strengths, I think you're a phenomenal picker. And when we think about portfolio construction, how do you think about how many companies, the right level of diversification, and how many is enough?
So this is where we differentiated the model quite a bit. And so we said we wanted to build a new fund specifically for early stage in Europe. And our general view is that Europe is a growing ecosystem and there's a lot of promise here, but it's not the size of Silicon Valley.
Sure.
So that means there's going to be a finite number of companies that are built every year in Europe. And we just want to be the best possible partner to those companies and adequately support them as we can as a team. And so rather than try and build a fund of 30, 40 companies and then, build that over 2-3 years, we said the number of quality companies that we can be great partners to is actually probably smaller than that. And let's be super concentrated. So 15, 20 companies per fund and try and be the best possible partner to those teams.
So when we think about that, sorry, I'm just running through the numbers now. So you have like 475 million and then you have 15 to 20 companies. So that's like 20 million per check?
Yeah, so the 475 will be more like 20 companies rather than 15. So fund 1 was 10 companies, fund 2 is 15 companies, and fund 3 will target 20.
Okay, so
that kind of grows in line with the growth of the European ecosystem.
Got you. So we've got 20 companies. Do we have, how do we think about reserves and reserves management?
So we actually don't reserve as standard. And this is something I think I learned from previous venture experience when I was working for other funds, is that I think actually like the follow-on can really damage fund returns in that you should buy your ownership at the lowest possible cost, which is the initial cost of seed or Series A. And then especially in the growth market that we've been on where, the follow-on is done at 4 or 5x. And not a lot, I mean, you're somewhat de-risked, but you're definitely not completely de-risked to the point of a growth investment. So you could be spending an additional, say your initial cost was 5 or 10 million, and you're spending an additional 5 or more in pro rata, but at a much higher valuation, then your blended average suddenly looks a lot worse than having just bought your ownership at a lower cost. So we said we're just going to do initial investment with a very small amount of follow-on if our companies need help getting to an exit or struggle to raise. And so 95% of our investment will be for initial.
So I totally get you, and I agree with you. The difference between our structures is like in my current fund structures, I generally do it with a lead investor.
Yeah.
And so bluntly, I'm not on the hook for it when there's a bridge round needed, or like now, when even you can have great companies, but Series B investors are kind of few and far between if you're not in AI. Are you worried that your reserves ratio or lack of will actually suddenly be very needed by a generation of Series A investors or Series A founders that don't have the Series Bs as readily available as they were in the last few years?
No, because, and this is where I'm actually quite proud that our, how we've supported founders and how we've thought about capital efficiency and the way that you spend capital actually hasn't changed between like the bull of 2020 to 2022 from before that and to now, in that we've always said to founders, be in control of your own destiny, manage your runway and your burn, and don't expect that a raise is just, automatically 12 months out. Like you have to be able to control how fast you grow or not. And when we fund them at Series A, we say, here's enough capital for 24, 36 months post our investment. And let's be honest, if you can't raise capital after that point, you probably aren't building a viable business. And we feel that that's enough runway for you to really give it your best shot. And we'll work with you for all efforts beyond that. But if you can't after that and you've run out of cash, it's not we shouldn't be investing more to extend your runway. I think we just have to be honest at that point. There wasn't a viable business to be built.
I know, listen, I do agree with you there. I guess my question is, so on the sell side, when you're selling an entrepreneur, often I get founders that say, but X multi-stage fund, they can do the B, they can do the C, they can continuously reinvest. How do you kind of combat that argument when you're trying to sell a founder?
But the reality is, even for a multi-stage fund, when they could theoretically do the B, C, D, they're still underwriting that new investment. It's not like they blanket just give you the B, C, D. Like you have to perform in order to get that capital. And actually by us not investing at that stage, we are so aligned with the founder and trying to get them the best possible raise at the next round. So we're just trying to focus them on building a viable business. And so it's actually never been an issue with a founder when we're talking about investing.
Can I ask, how do you tell a founder that you're not going to reinvest? It can be a difficult one if they just even expect a little bit, but say a company's not performing. How do you deliver news that actually I'm not going to invest again?
I think because our default upfront is, we're not investing at the B, C, D, and this is why we want our ownership at the A. It's not actually a hard conversation. And also, we work so closely with the teams that I would say the founders themselves normally know when it's working or not working. It's not coming as a surprise. Like, we're working through, there's a budget, there's a business plan. These are the KPIs that we're working towards. Every month, we're talking about what's working, what's not working, if not beyond more frequently than that. And so I don't think it ever comes, the relationship, it should never come to a founder as surprised as what you're thinking. That's my philosophy. Then you've misled them somehow.
I find that happens a lot, though, especially in Europe, where it's you're doing great, Ophelia, you're doing great. And then 3 months before fundraise, it's we're not actually in a position. And it's really?
I think a lot of funds have earned a really bad reputation that way, where founders have come back and thought this whole pitch, they underwrite all of the next rounds. And then they turn up at these investment committees where a bunch of partners also have no idea what's going on in the company. And then I turned up at this partnership meeting and, no one knew what we were doing or how we were performing. And suddenly I don't have a term sheet.
I think IC is the most inefficient decision-making processes ever. Genuinely, you turn up in a space where you're not, you often have these big general partnerships, the fintech partners chiming in on a consumer social deal that they don't know the benchmarks for. They haven't really met the founders more than once other than the partnership meeting. It's yeah, I agree.
That's why we did away with the IC at Blossom. It just didn't make sense when you're, from what I saw before is that there would be a subsection of the team or one partner or two partners that spent an incredible amount of time with a company, built a thesis, and then, as you say, a lot of other partners come to it fresh for 45 minutes. How can you judge from that time?
Sure.
So much goes into building a business. It just became, I feel like the IC formed a very political environment.
I totally agree with you. Do you agree with signaling? A lot of people say, there's incredible signaling risk, and then a lot of other people say, it's actually over-exaggerated. Do you agree with signaling risk, and how do you advise founders on it?
There is signaling, but a good investor doesn't necessarily pay attention to those signals, You shouldn't be worried about whether X is investing or not investing or this or that. You should have the courage of your own conviction. And this is why we talk about high conviction investors. You have to decide whether or not you want to make that investment. You have to decide what the inputs are that you place value on. The rest of the signaling, don't worry about it. And think about how many great outcomes have been where the journey has not been straightforward,
I don't think it's ever straightforward, ever in any great company. I think I've seen many times before it tweeted, but every single company that you see today up and to the right, it was so not up and to the right. Can I ask, we spoke about that decision-making process and, working with the founders. I take the view, honestly, that I can help you hopefully be greater than you are, but honestly, the best founders do not need me. Do you agree with me in terms of saying the best founders do not need our help?
The best founders will still be best founders that build great companies. I think there are ways that you can find to be helpful.
Totally.
If I take Guillaume at Checkout, Guillaume's going to build a great business whether or not Blossom is invested or not, but I can earn the right to feel like I contributed something by working incredibly hard for him and the business. So I think that the best founders will see how they can draw on help and how they can kind of make people be valuable to them. But of course, a great entrepreneur will always be a great entrepreneur.
No, I totally agree. I think the thing that I see when I look at the companies that work and those that don't, for me, is speed of execution. It's the biggest determinant of success for me when I look at companies that work. Do you agree with me on speed of execution being the most important thing when you think about what's worked in your portfolio?
Definitely speed of execution. There's courage and the conviction of ideas and how to move on things. There's no analysis paralysis, etc. The best founders, there's something a bit difficult about them as well. Do
you always get that pre-investment?
No.
You just see a post.
No, I mean, as you know, it's an incredibly hard being an entrepreneur. You have to make 100 decisions a day. Some of them are not going to be favorable. Some of them are going to be difficult. And sometimes if you decide to go down one path, you can't be fazed by every decision. You just have to be, cross the chasm and go for it.
Here's a bit of a deep one, but I mean it applied to investing. How do you think about your relationship to regret? Naturally, you make a bad investment and you regret making it. How do you think about that relationship to regret as an investor?
I don't have regret. I have learning.
Sorry, that was brilliant. That was like I worked too hard in a job interview. Okay, you have learning, and so you then reflect on it. Like, do you actually like do a session and think, what did I learn from that?
Absolutely. I remember one of the first investments that I made when I was at Index, and the company was performing so, and Neil asked me, so what's your learning from that? And that really struck me as that you must take something away from a bad investment. Like, it wasn't just bad picking. Something happened afterwards as well. So what did you learn, and what I do fundamentally believe in never make the same mistake twice.
Sure.
So there's always things to be.
What do you think is the biggest mistake you've made? I'll be honest with mine too.
As in picking investing, or?
As in when you reflect over your track, you're like, I made this mistake. So I invested in a company, and on paper, everything was great. Numbers worked, cohorts worked, economics worked, and there was enough data, and it was at a stage where you could actually make that assessment. But the geography was one that I was not familiar with. And there were things that happened in that geography which I was totally not accounting for in my very rigorous but academic assessment of a not real world.
And I think that's really important. So I think investors can get fooled into thinking something is a great investment thesis and ignore the practicalities of the execution and execution risk, etc. So I think a lot about that. Like, you can build a beautiful investment thesis around why a piece of software might work, but if the team isn't right, or the geography isn't right, or there's something wrong with the market, then you'll still be wrong.
Totally.
So I take away a lot from, was it team, was it market?
So what was your biggest mistake?
I think biggest mistake is team, always.
Where you misjudged
something on team.
You thought they were better?
It comes back to execution speed.
Yeah.
And this is why I love to know teams before investing.
Yeah. No, I
think the other thing is, and I learned this earlier on, is that you can kind of suppose that you are going to do the building. So you can throw a lot of ideas at a founder and say, oh, but if you do this and do this. But they have to want to do it. Like the ambition, the drive, the ideas. So that I learned very early on.
It was funny when I was working with Fred at Stride, I always had the Fred test. Fred is a brilliantly smart operational mind. And I always have, would I rather back Fred as the CEO or the CEO? And like 98% of the time, I would rather back Fred as the CEO. And we'd come out of the meetings together, and I'd be like, can I invest in you as the CEO of this business? And we were like, all right, done. That's it. And so that was a big thing. You said there about kind of learnings. I have to ask, we see a lot of scout programs. I think every big fund has a scout program. You did the Blossom Scout program. They didn't work. Why didn't it work? And what were the learnings from that?
So we were really trying to innovate on this concept of Scout program and taking what has worked in the market and what hasn't. And so Blossom wasn't doing pre-seed or seed, and there were lots of founders that we thought deserved to raise capital, but they just weren't for us. And so we wanted to, on one hand, kind of enable them to be successful in their fundraising. And on the other hand, there were loads of operators in Europe that were starting to think about angel investing. And they might have deal flow, but they wouldn't have time in terms of judgment, or they didn't have the capital, etc. So we said, we'll create an angel program where I think it was 15 angels operators and some really great names. And we said, we already have the deal flow. We're going to bring you the ideas. You as a group form the IC and decide whether or not you want to invest. And then we'll facilitate the administration and the capital, etc. And it was meant to be $250,000 per investment. And it was a great idea, but it was just as I said, all these operators were starting to be angels. And actually what founders wanted was a 10K check from one angel and a 10K check from another angel. They didn't want a group at 250. Yeah. So it just didn't work for the market.
No, I totally agree. We actually host dinners here, and we had an angel dinner the other day with several people who were angels and they were scouts. And they were like, the best deals are going in my angel checks. And it's not because I'm being devious, it's just because I turn up with the scout checks. Yeah. And they're like, oh, no, we don't want the name of that. Like, no, we take your money, not the fund money. And I thought that was really interesting that actually was a real pushback. Why don't you do seed though? Like if you look at really every big fund now, they've all aggressively moved towards seed, which is why I send you all of my deals. Why don't you do seed?
So we actually pulled out of seed. I think at the same time everyone decided to go into seed. We were like, this
contrarian and hopefully right.
Hopefully right. I do worry actually when I look at all of the deal activity in Europe that it's all at seed stage at the moment. And it's, the multi-stage funds, it's new seed funds, etc. And we said, no, we're just going to stay to our swim lane and just do Series A. And I think it was a combination of things. I think for a seed fund, you need diversification because there are things outside of your control. Again,
100%.
The best investment thesis you can write. But things that, the loss ratio at seed is just much higher than A. And you probably do need that diversification, whereas it's not so it doesn't suit so much a really concentrated strategy.
Yeah, I ran the numbers. We have 40 in it because at 40, when you run a Monte Carlo with a fat tail, you get like 92% of the benefits of diversification. But at 23, you get like 75.
Yeah.
So it's like actually a reasonably big drop, actually.
And the other thing is, where we feel that we can add value as partners is really at that inflection point when you come to A, where you have some initial signs of product market fit. And you want the capital to help you scale to that predictable and repeatable revenue stage. Like that's where we feel that as our expertise, we can really help companies. And at seed, it's much more about finding PMF. And we didn't feel as VCs that was so much of where we could help. I think there are some VCs that are really good at that. But also a lot of finding PMF is within the founder's control. So you started a company because you have an idea of something that needs solving or a product that has to be in the market. So what can we tell you from a product perspective? Probably not much at that point. I also think when it comes to hiring at seed, a lot of the hiring is from your network. It's not where you're thinking about that, the first hire that's out of your reach, where can my investor really help me get that incredible VP sales or incredible VP talent.
Do you take board seats?
Not at the A stage. So our model, because we only make 5 investments a year, coming back to the concentrated approach, we have 3 partners and we say all of us support you at that stage. So when it comes to the point of appointing a board, you know the Boston partnership really well, so you can decide which 3 of us you want as your board member. But also the support that you need at the A stage is different from the board kind of governance and the role of a board. Like we're just very much here to help you in the build stage. So we meet regularly. We have on-sites with all of our teams every month. We have WhatsApp groups. We're very regular in contact, but it's not a board forum. It's much more, we're with you as partners. We're an extension of your team. Let's think about, how the business is tracking, have these strategic discussions, but you're not quite ready for that board format yet.
It's a weird thing where the conventional wisdom is that you shouldn't have boards too early. But the more I do pre-seed and seed, the more I think you should have them as early as humanly possible. And I do, and it's not an arrogance. It's just like, as an investor, you see hundreds of different situations, and you can stop people doing really silly things, which when you're so ingrained in what you do, don't seem that silly. I've done them as a founder. I'm sure we've both done things as a founder. You're like, oh, I was obviously wrong. And I'm like, that could have been so easily stopped had there been some form of controls, sounding boards that was more formal than just the investor update that you mostly honestly just get as pre-seed and seed investors.
So that I agree with, but that's why the structure of our support, and also you can get all of the governance rights, etc., and the shareholders agreement doesn't have to be at the board level. What you need to facilitate is what you're saying is like you want regular communication, you want insights into what's going on. So we always say we want to know the bad news as quickly as possible because that's how we help you figure it out.
Yeah. No, I mean, also, I think as you kind of scale, but like the really silly things like going after a completely wrong ICP, you don't do as much because you have the data, you have a lot more understanding. It was Dev actually at MongoDB that said the thing with information is it flows at different velocities. Good information flows very quickly to you, and bad somehow takes a lot longer, which I thought was actually really good.
And it's true. And I feel that after the investment, you work so hard at building that relationship with the founder to make sure that they feel comfortable giving you the bad news, because that's how you support. As we said, not everything is going to go up and to the right. There are going to be all kinds of problems. But if you feel comfortable sharing, like just so you know, we worked so hard to win the investment and win being your partner. work really hard to help you solve.
I know. I know. No, I know. Listen, we are very honest with each other. You have the most stellar founder references from people that work with you. Like, it's really, like, I tweeted it when I did them, but it was fantastic to see. You mentioned there, like, oh, I sometimes regret, we don't do seed. FOMO is something that I struggle with. Everyone struggles with, I hope. Do you struggle with FOMO? And how do you think about that kind of regret minimization on deals that you didn't do? There we go.
So FOMO investing has never quite made sense to me. If at the early stage, it's all about seeing something that someone else doesn't, then there shouldn't be 15 term sheets for a deal, because that means everyone's seeing the same thing. And I actually try and stay away from those kind of deals, because...
Sorry, I'm jumping in, but do you not think with the commoditization of data that we have today, like we have 4 data platforms here which track everything from headcount growth, revenue growth, Alexa web rankings, everything. And I know that all the other multi-stage funds have them too. One of my friends is like a very pedigreed operator, and they got 28 pings from associates on one day because they showed up on a data platform. And so literally...
That's not thoughtful investing.
But we've moved from this cottage industry to this like low margin, high velocity business, whether we like it or not. And so is it possible to still do that?
The last 5 deals that we've done, there has been no competitor, no single competing term sheet. And I mean, we could be doing something horribly wrong, but you're with me in one of the last investments.
Yeah. When then suddenly there is like a competitive one, suddenly.
But, I mean, that's actually a great example. So we, signed the term sheet and they got called up by a competitor fund that same day, being like, "Don't sign. We're coming to take you out for dinner. Like, don't sign." I mean, how can you interject on a deal so late in the process?
I mean, it's got to be a great dinner, doesn't it? I mean, you are counting on a full works dinner there. I love that. But when you're thinking about this, like, one thing that I think about, and I think about it even more so today, but it's just like pricing and, yeah. How do you reflect on your own relationship to price and when to pay up and when not to?
It comes back to the philosophy of there are only a finite number of outcomes that are going to matter each year, and you just want to be the best possible partner to them. So... And for our fund model, we're pretty explicit that we want 20% ownership, because if you're going to be one of 15 or 20 companies, we really want you to matter in the portfolio, and we're going to work incredibly hard to help build value, etc. And a function of therefore price is, how much capital do you need to scale your business the next 24 months and your evaluation. If you're like plus or minus around the margin, and you've decided that's one of 5 businesses you want to partner with that year, it doesn't matter that much. If you are moving away so far in price that you can't believe that this company can be material to you and therefore to your LPs, I believe that's stretched too far.
Can I ask, 20%? That is, to me, like a time gone by that I look at fondly, but I mean, a time gone by. Like, do you worry that actually it's a little bit of adverse selection just because, like, I don't know many funds at all that get 20% consistently anymore?
No, I don't worry about adverse selection. When I look at, the quality of the founders and the companies that we've partnered with, and I think...
Do they push back when you say we need 20%?
Not all the time. But it actually becomes easier the more proof points that you have of how we can support that. If you can point to Pigment and Tynes and Checkout and Moonpay and Spacelift, and there are great companies in concert with you and like in the Blossom portfolio, where we've brought in great investors afterwards, and you see the rise in valuations, etc. I don't think founders mind.
Yeah. I get you. Does it not make it also harder to construct rounds? Because it is a large chunk of rounds. I mean, if you're going to bring other people in, you're going to be diluting 25, 26%.
So we don't, we lead. We don't work with other VCs. So we might work with occasional angels that want to be alongside with us. That's at the founder's choice. Like, we obviously make introductions to people that we think are going to be relevant, but the founder will choose. Yeah. But it's not like seed. There's not room for more than one investor in it.
Yeah. I think a generation of investors disagrees. What do you say to them?
I would say that proof is in the portfolio that we're building.
Do you do outcome scenario planning? Because if I were to say we were in the same team, I would say, well, actually, if you actually think about how big your true winners can be, if you have a $5 billion company and you have 10% at exit, which you could have with dilution on a 15-16% initial holding, well, there's your fund returner. And so actually, potentially the 20% is too aggressive. My question is, do you do outcome scenario planning, and how do you think about that?
We do, and I would challenge that if you started with 15% by the time of exit, you're left with 10%.
Why?
Because I think of them how many more rounds, the option pools. I mean, to only suffer 5% dilution from the Series A to exit would be pretty impressive.
How do you think about European venture state as a product? Are you like, yeah, actually, I think it's pretty adequately served? Or are you like, actually, there's quite a lot of mediocre players?
As in, are there too many players in the market?
Are there too many players, one?
I think venture is a very transparently competitive sport where the founders ultimately choose who deserves to be in the ring, which is quite an exciting industry to be in. Like, you constantly have to earn your place. And I think what's exciting about Europe especially is, 10 years ago, European founders felt that they had to go to the Valley to raise capital because there wasn't sufficient capital in Europe. Now a founder does not have to leave. Like, everyone's here for them to choose. And the nature of the conversations and the way that they've risen to that and wisened up is actually incredible to see. Like, I think founders are getting better support, better information, because they have suddenly realized that they are in control of who they get to choose to be on their cap table.
I credit podcasts like this, to be honest, but I agree with the sentiment entirely. No, I agree. I agree, but I actually just look at over the last 3 months, I've seen 3 deals now where US VCs, multi-stage, have come in and won against seed VCs in Europe and multi-stage VCs competing at seed. And I haven't seen that before. 3 in 3 months where they're like supremely hot deals and they've chosen US multi-stage over European.
So I find this really interesting, Liz, and I think like European VC has an image problem. You can help with this. So if we look back at the history of European unicorns that have been built and look at who supported them in seed and Series A, it wasn't US multi-stage firms. So there is something to be said for the European firms at the early stage who have the understanding, the network, etc., who support these companies. But there's obviously a lot of prestige with US venture and these brand names. And I think for some founders, that's really important. But I think that if European venture did a better job from a PR perspective of how they've helped build these companies at the early stage, founders wouldn't have this kind of, they feel like it's a lesser to pick from a European VC. But it's the ones on the ground who understand who are going to be able to help you.
It's interesting you say about me having a role in that. European VCs suck at telling stories. I know often people are like, why didn't you have more European VCs? Honestly, they really do not articulate stories well, and they're not inspiring, exciting. They don't resonate in a way that US VCs absolutely do. Like, it's really interesting. US VCs sell their product better.
I mean, Americans are very good at selling.
Which we love. To our US audience, we're very, very grateful for your sales ability. Where do you think, actually as an investor, I should improve?
You should improve.
No, you. That's not me.
So next, Harry, here's some feedback.
B minus. Do you think you know what? I should get better there.
I think over the years I've become to realize there are so many different ways of looking at something, and you really have to focus on broadening the mind. I think narrow does not necessarily lead you to good places. You've got to have the courage of your conviction. You've got to be able to have judgment, etc. And you should be able to pay attention to what's important or not. But it really does take kind of thinking, I wouldn't have looked at it that way, or not assuming that someone just thinks like you. I spend a lot of time focusing on that. And that's really why I like a diverse partnership and having, like, if you look at me, Imran and Alex, we have very different backgrounds, very different views on things. And we don't necessarily see eye to eye, and that's a good thing.
You said you don't have ICs, but you mentioned 3 partners there. How do you actually make investment decisions?
So a lot of discussion and debate. It's very iterative. Like, we won't just have a company come meet us, present for 45 minutes. We spend a lot of time kind of thinking about, challenging each other on the investment thesis, the market size, whether the team strengths are, where they aren't. And the more you go along, you come to realize like where you stand on different parts of the investment. And then once we decide to invest, even if we've disagreed over points, because we all support together, we're all committed to this company being successful.
Do you agree with the disagree and commit as like a
Yes,
principle? You do?
Absolutely. This comes back to you've got to believe that something that someone else doesn't at the early stage.
Yeah.
And so you have to give partners a place where they feel that they can articulate. I really believe, I see that you don't see that, but I very strongly do. And then, if a company is going to be one of our 15, 20 companies, we should be committed.
Can I ask a weird one? But I had David Tish on from Box the other day, and he presented this framework for like advising founders on rounds. And he said you have 3 variables to really think through. 1 is price, 2 is the size of round, and 3 is the brand of the investor. And which 2 you have out of the 3 is my question when I ask you that. Price, size of round, brand of the investor. Which are the priorities and which do you let go?
As in when founders are choosing to work with Blossom?
As in, what would you advise them?
Price and round.
Really?
So I think that it comes back to the, how many venture firms are there in the marketplace and what does brand really mean? And actually this comes from the hard way when you're a new fund. Like when Blossom started, we didn't have the brand of a 20BC. I mean, we were no brand firm. And we really had to earn our right at the table. And some of the hardest fought deals were, do I go with a brand firm or do I go with this unproven startup Blossom? And we had to show, like, this is what you get if you work with us. And I think the value that you get is more important than a brand. Like, I think there used to be a thinking that brand will help me hire, brand will help build publicity, but so many deals are done. Like when an engineer is choosing to work for company X or company Y, they're going for the mission and the product and the team. Like, great if you raised money from a brand name investor, but brand name investor has also done 40 other deals that year.
I agree. I think it can help. I have multiple. Well, I think it can help if it's Sequoia. To people resonate with it as a brand. And 2, I think, but the flip side of that is actually if people are like, oh, well, Sequoia did it, or X funded it, I don't want to pick on Sequoia, and use that as validation, maybe they're not the right choice to join your startup. Like if they're joining because of the investor, well, that's a large part of their consideration. I would think hard about that.
Yeah, I honestly would choose anyone who's joining me for my mission, because of my work culture, because of a number of other reasons before they're joining me before my investor.
What would you like to see Europe do differently? Like I said, I think we can tell stories better. I think we can actually present better as a VC class. What do you think Europe can do better on?
I would like to see as companies scale and we have fewer companies going, from the Series C beyond to exit. I feel like there should be more shared learnings amongst that community. For, founders are very scared of reaching out to other founders because, the founders are busy or whatever. But I feel like in the US, there's much more like collaboration between helping people. I mean, you're part of a lot of these communities, etc., networks. Europe's kind of growing in those, but I think we could help push that forward.
Is there anything we could do to do that? Is that like operator networks? Is that like angel networks? Like,
I think the distinction of investing versus helping build is very different. So I think angels have one place, but I think operator networks where it's not just about supporting the founders, it's about CMOs, CROs, etc., really enabling them to be successable.
One area I think Europe's really just poor and is not okay is bluntly in LP provisions. And what I mean by that is, I think it's poor in a couple of ways, but like fundamentally, some of the largest pension funds in Europe don't invest in venture. I mean, that's like unthinkable in the US. I think when you look at a lot of educational facilities in Europe, we don't have any allocation to venture. I know the budgets are much smaller in the US. I'm not asking them to invest the same amount, but they should be investing just for their sake. When it comes to fundraising and LPs, how have your experiences been? You were a solo GP. I hate this question. Fuck, I can't believe I'm asking it. But you're a female solo GP. Like, how was it for you?
So I'm very...
That was a terrible question, wasn't it? Oh, no. I'm going to get killed for that. Anyway, you rock and roll with it.
I'm very glad that I was quite naive coming into the fundraise process. I mean, I'd been at Index, I'd been at LocalGlobe.
But you don't get to see a lot in like Index, I presume. You don't get to see
funds just got raised.
Yeah.
So...
Click to pay, PayPal.
I thought that's how it would go, It was, fundraising as a solo GP for Europe was brutal. There's no two ways about it.
I remember when we were raising a fund for my old fund, and we were raising it at the same time, and everyone was like, "Oh, what do you think about them?" And you're like, "Well, not invest in us, please, please." I'm sure you had the same. God, it was brutal. No, it was brutal. But why was it brutal? Just like so many meetings, like people saying no.
It was. There were reasons that people would say no that I could understand, like solo GP. When people would tell you, "I just don't believe in Europe." I found that no hard to, like, wow, this is the career that I've built and this is like the market that I really believe in. There's not much I can do with that feedback.
But I'm also like to that, like, and I don't mean this irony, why take the meeting? That's like me meeting a SaaS company and then saying, I don't believe in SaaS, so I should never have taken the meeting if I didn't believe in SaaS.
That's one thing that I learned about the LP market is that everyone will take a meeting. So I remember when people would ask for the data room at the end of the meeting. And so if you're a VC and you ask for a data room, it means that you really want to consider investing. And then I realized that we were sharing this data room and no one was doing anything with it. And so all this money that I thought I was so close to raising.
Why were they asking for the data room then?
I guess there was this data inside it. It was interesting. There were stats on the Europe.
But they weren't going in it.
There was this... Why not data collect?
Oh, I love it when we do like the theses on like the European market. If you're like selling the market, a lesson that I have is
that's never going to happen.
It's just done. I also actually say like actually don't ever set in the data room unless you're raising big, large funds like your multi-billion-dollar funds or your multi-stage funds. But generally speaking, because actually you have this paradox of choice where suddenly they give them 12 things in there. And they're like, I'll get to it later. And actually you say, what can I help you with specifically? You want my track? Great, I'll send you my track. You want actually, I don't know, the operator network that we're building up? Great, I'll send you that. But like, give them what they want, not the link in some horrible docsend or whatever. Do you know what I mean?
I do. We were using Dropbox, which was also probably not the...
Oh, we paid extraordinary amounts of money for this thing. What was the most memorable LP meeting you have?
There were a lot of bad meetings, but the French... What's the French equivalent of EAF? The
BPI.
BPI. They asked me where my older male partner was.
Oh. Huh. What do you say? Like, he's sick?
No.
Can you give me 10 million quid now? Sorry. No, you said like no.
Yeah. I was like, I don't have one.
That's terrible. That's truly terrible. What would you change with LP markets?
It wasn't something that I'd change, but when I came into market with the first fund, I was like, we're closing in, thanks Mickey for the advice. We're closing in 3 months, one and done, etc. And then I realized that actually this is a really long-term relationship.
And you didn't have those existing relationships, correct?
I had a couple of existing relationships.
But it wasn't like you were going to 15 that you'd known for years.
Exactly. And then I was like, okay, I actually really understand why this takes time. I understand why you'd want to see our performance and our execution over some months.
Yeah. And so you did, sorry, I'm digging in because I think we have so many managers that listen who are going through this. And it's like, you did a close and then you invested or you just focused on fundraising?
So we did a first close within, I think it was 6 months from beginning to the first close.
What sort of percent is that? For you, would you recommend for people? It doesn't have to be yours personally, but like people...
So the advice that I was given was get to 50%.
Yeah.
I don't know whether that's holds, but that's the advice that I was given. So that would be my...
Yeah, I agree. If you get to less, it's not sure enough.
Yeah.
Yeah.
I mean, we would have closed on anything. We just wanted to be in business, but we got halfway. And then there's a provision in the LPA that says you have 12 months. And so after our first close, people took a lot of meetings with us, I think, to figure out, how did that manage to get to our first close? What's going on here? And I realized after those meetings, actually, they were never going to invest. They were just, again, kind of curious. And because we had the 12 months by the provision in the LPA to do the final close, people wanted to wait to see what investments we did.
I think you did the right thing, though, and it was a big lesson for me actually watching you externally, was you did the closes and then you invested. You built a book of business. You showed the type of companies you like to invest in, also how you invested, how you thought the work that you did. Whereas I think, a lot of people, or maybe just me, didn't in my first funds and just focused on fundraising, which makes sense from a productivity perspective, but then you're not building any form of book to show, and it makes it harder almost to sell, if that makes sense.
Yeah.
What lessons do you have on building great partnerships?
It's the toughest thing.
Yeah.
I think finding talent, the right talent, building a culture, I mean, that is the hardest thing, and not necessarily something that comes naturally to an investor like a founder. I think some people will really thrive in one workplace culture and not in another. And so trying to figure out dynamics between people and how people work in a certain environment, I think that's what you go through at the beginning of a company's journey, is that some people are really good for that stage, don't enjoy that stage. Some people will think that they will really enjoy a concentrated strategy, but actually won't, etc. So there's just a lot of learnings.
Can I ask you a weird one? I think the reason we get on is because we're both quite intense and on all the time, which sounds like a humble brag. I think when I'm literally messaging on weekends and getting pissed off with people why things aren't being done, and it's it's the weekend. Do you expect people to be like you?
That goes to my earlier point. You've got to understand that people aren't necessarily like you. I also think that there are certain things that you can remind yourself that it is a Sunday morning. Perhaps that message doesn't need to be sent at that hour. But trying to tell yourself that you're not intense, you're not going to act in an intense way or do certain things because that's who you are. I don't think you can fundamentally change yourself. You can improve yourself and definitely respect the other person and be conscious of how they are not like you. But if you're an intense person, that's kind of got you where you are, and there are parts of it you should really own.
Speaking of which, final one. I obviously think the world of you.
Caveat. There are some people that don't.
I think we had it as an Oreo the other day, which is no, that's hard, soft, hard. Maybe this is a shit sandwich. I don't know what it is, whatever. It's some form of metaphor of food and shit.
It is the crap.
Yeah, I think you're great, but some don't. Does that upset you? And how do you respond to that, whereas people think you're abrasive or bluntly challenging?
I definitely care. I think there's ways that I come across that I don't think people necessarily understand. The abrasive thing, I think people don't know that I'm actually much shyer than you would think. When we're at university or when we're doing our MBA, there would be always a group of people getting drinks in the bar and being really sociable, and I'd be I'm gonna go and do my work. And I'm actually more comfortable in a one-to-one setting than a group setting, but people think that means I'm abrasive. I really do care what other people think, but also that doesn't prevent me from trying to be honest and be truthful and direct. So if I need to say something because I think it's important that you hear it, as long as that message is delivered in the right way, I feel that that's how I should be. But I've never tried to be, rude or etc. The whole she's aggressive, she's sharp-elbowed.
Do you think they'd say that if you're a man?
I don't think people would say that if I was a man. I think that's a comment that people level at a woman all the time. and one of our favorite LPs, when they were taking the references, and they said, people say you're aggressive, but I like it because I'm teaching my daughter to be precisely like that. Venture is a competitive sport. If you want to lead deals and you want to be a great partner to your founders, then you are going to inevitably be a bit sharp-elbowed.
I totally agree. What matters is what the founders that work with you say, which is why I think it's interesting to compare what your co-investors, well, not co-investors, but people in the ecosystem say and what your founders say. Sorry, I had to ask it. Now that's done. We can do a quick fire round. It's my favorite round. Okay, what would you most like to change about the world of venture?
I don't like the hype. I would love to go back to the art of deal making.
Do you think that's possible? Is this not just a product of so much cash in the ecosystem?
I think it is a product. So I think it depends how this cycle ends.
What's the hardest element of the entire Blossom journey? Do you remember a moment when it was like, oh my God, this is hard?
The early days, again, it goes back, they were brutal. I mean, sometimes the no's came out of places you didn't expect to.
What did you tell yourself when it's like that one, the ones that hurt are when it's like, it's close and it's a no. And you get that and you're like, oh, I thought they were there.
This is what I would say to any founder or any person building a fund. 99% of it is sheer determination and perseverance. Like, there was just no option not to get to a first close.
I totally agree with you. I think just human nature is you give up, which is something.
But I think also a lot of that's also what I learned, and this comes from my husband, who actually raised a fund before me, and I owe a lot of my success to him. He was like, it takes 8 meetings to close an LP. That was his rough rule of thumb. And I was like, why so many meetings? And he was like, they just don't expect you to come back.
You're like, yeah. Thing is, I do it like 8 days in a row. Like, I'm here.
I'm still here.
Yeah, I'm still here. I actually heard a rumor once. This is off schedule, but just heard a rumor that you like slept in like an office waiting room to get a deal. Is that true?
Let rumors be rumors. Let the myth perpetuate. Anything to get a deal done.
I was like, that's kind of impressively weird, but I wasn't sure where I landed. What's the trend that most investors are ignoring right now?
Crypto.
I genuinely think like growth crypto is like potentially, no, I'm being seriously one of the most interesting, because you've got 1,000 companies funded, just making up numbers, over the last 2 years. And actually, listen, 15 to 20 will actually be incredibly strong teams and companies. Who's doing crypto growth right now?
I know. Who's even doing early stage crypto anymore?
Me? I'm still doing it. Guillaume said this. How did you travel during COVID to get a deal done?
We go full circle, do anything to win an investment.
Where did you go?
Went to Paris.
Oh, wow. When you weren't allowed to?
Well, I was allowed. I have a lot of thanks to my partner, Imran, who went to the details of how you could get into another country. And if you were traveling from your primary residence to your other residence, so i.e. if my Estonian husband could go from London to Estonia via Paris with me, then you could get to Paris.
Have you ever seen the Netflix documentary with Carlos Ghosn? The like Toyota executive who went in the like violin case, or the cello case, not a violin, he's not that small. But I was just picturing you like getting in a cello case to go to Paris for a deal. Much cooler. You could have styled that one out. Cold email to Mike Moritz and Alfred Lin. Alfred said you were incredible with your cold email, because you emailed both and they both independently were like, wow. What do you say?
I would never reveal secrets.
But like, well, okay, forgetting like that specific one, for founders cold emailing you, what would you say, advice-wise?
If they were cold emailing me,
yeah,
just be genuine. The number of cold emails that you get where you're like, there's no thought behind this. It's like a copy paste or edit the name, or it's very generic. You're trying to, in one email, grab someone's attention. Because you know how they say like first impressions matter when you meet someone in person?
Yeah.
Think about that from an email perspective.
Yeah. I totally agree. And keep it short.
Yeah.
Like, you sometimes get somewhere, it's like, oh my God, fucking 4 scrolls down. If you could have one word on your tombstone, what would you have?
Blossomed.
What did you do in the last 24 months that you wish you hadn't done?
Nothing. It's all learnings.
God. Fine. Arm wrestling a founder to ensure they took your investment.
I mean, when you can't win by any other way.
Did you actually do this?
Yes.
Where was it? Like middle of the office? Like...
No, it was in Dublin. It was for Tynes.
Oh, wow. And did you win?
I wish I could remember.
But you got the deal?
Yes.
No, got the deal. Penultimate one. You mentioned your husband. I clearly have not mastered this one. How do you be fucking stellar at what you do and also have a very happy marriage and also recent mother? How does that work?
It's being incredibly conscientious about how you spend time, what matters, what's important, and
what have you cut out that you used to do that you no longer do, if it's conscientious about time?
It's this funny thing. So before I became a mother, everyone was like, oh, you become so much more efficient when you become a parent. And I was like, I'm already pretty efficient.
Not worried about that one.
Not sure I can draw more that way. But what it really opened up is everything is just a choice. Whether I spend time on X, I spend time on Y. So if I want to make X number of investments this year, I better be very deliberate in which teams I spend time with, where I say yes, where I say no, where I can add value, where I can't. And that has been incredibly conscientious. I'm also very fortunate that my husband is the one person who will just call bullshit.
You need that. I have that in a mother who expects Chanel in return. I'd rather actually just speak bullshit and not have that. But I want to finish on the next 5 years for you. So this is 2028. What is Blossom then?
The best performing fund, at least in Europe, if not the world.
I've had so much fun doing this. Thank you so much for putting up with my completely wayward questions from, mortality to portfolio construction.
Thank you for not sticking to script.
It's because I can't read it while engaging. It's useless having it here. You're amazing. Thank you so much.
Thank you.